Hi there, welcome to another edition of Exactly at Home, north of Pittsburgh. And today I have the pleasure of speaking with
Sean Curran from American Financial Mortgage.
So tune in to find out how to navigate the current financial money borrowing situation so you can get into your new home. So Sean, I think first and foremost on everybody's mind right now is the change in mortgage rates from a couple years ago. What would you say to people as they navigate through the current situation and it's time for them to buy a house today?
Well, I would say right now we are fraught with uncertainty. And what I'm telling people that who are asking me, is it a good time to buy now? It really depends on the individual circumstance. If you are in need of a house right now, whether it be work, growing family, it is a good time to buy in regards to finally the housing prices are slowing down. I just read over the weekend that the price of homes has actually gone down by 0.7%. Does not seem like a lot, but considering that's the first time in 3 years that has gone down, with prices going up 40% over that 3 years, that's a good time to buy. Now I know that people get all concerned about, yeah, but Sean, the interest rates approaching 6. Yes, it is approaching 6. However, there are things that you can do moving ahead. You can plan on the possibility of refinancing in the next 5 to 7 years. Or you could do what's called an adjustable rate mortgage, which is a lower interest rate. Right now, the adjustable rate mortgage rate is 4.75, and that's for 7 years.
Wow.
So that will adjust after 7 years. Now, what you're hoping for in a situation like that is that you're either going to move or you're going to be able to refinance. That is the ultimate goal with an adjustable rate mortgage, because you don't want to incur the adjustable rate, which would probably be somewhere in the neighborhood of approaching 8.
Yeah, interesting. Well, so there's an option for people, and I know you have lots of programs. So Sean, tell me about what makes American Financial stand out from other firms in the programs you offer.
Great question. First of all, American Financial Mortgage has been serving this community for 33 years. We are one of the area's largest mortgage bankers. And what I mean by bankers is a lot of times people will think of broker. Well, there's a big difference between a broker and a banker. A broker takes all your information and they send it to the investor. Okay, the people that they're going to sell the loan to. At American Financial, because we fund the loan in our own name, because we are a banker, that means we're underwriting it in-house. And we're utilizing our pool of appraisers. Now, there's two big things to that. The fact that we're underwriting in houses, we're still utilizing common sense underwriting, which seems to have left this business a long time ago. And then the advantage of utilizing appraisers from our own pool is, back in 2010, when the Dodd-Frank Act came out, they made mortgage companies adhere to appraisal management companies. Before that, appraisers were simply chosen by the mortgage company, and there was a lot of shadiness in doing so. So it kind of went from the Wild West to the Brinks lockdown now, because now with the appraisal management companies, you are sometimes getting an appraiser from an area who is not familiar with the area that he's appraising in. For example, you may have an appraiser who's up in the North Hills coming over to the South Hills, an area that they're not familiar with. With us, we're picking our appraisers from the areas in which they're familiar with. Another advantage is we are a very small company in regards to employees, so we have very little overhead, and we are able to pass that on with the rates that we offer. I'd like to say that we have some of the lowest rates in the industry, and we have lots of various programs that we offer. Right now, we have a physician's loan that is at 4.5% and 0% down and 0 mortgage insurance. It's absolutely phenomenal.
Wow.
We also have a jumbo program that is also at 4.5%. And if you have a qualifying credit score, you can put 15% down and still have no mortgage insurance. And then we work with the PFHA, the state bond program. And what's lovely about that is if we're dealing with, say, a first-time home buyer that doesn't have a lot of liquid assets for closing funds, we have a program with them that gives you 5% of the purchase price towards your closing costs. So if you're able to, excuse me, if you're able to utilize that with Seller's Assist, I've had people who have come to the closing with $1,000.
Wow.
So that's an absolutely wonderful program.
Which, yeah, for buyers, they need to plan that they're going to have the right amount of money in the bank when they go to closing, which is another thing we counsel people.
And it's so important for buyers to touch base with the mortgage professional sometimes before they even contact a realtor, because as you know, a lot of these people will come to you and you ask them if they have a pre-approval and they don't, and you can't really put an offer in because you're spinning your wheels. So I always recommend that these people talk to a mortgage professional first. We can pull their credit, we can check their finances, we can plan properly for them. So when they're putting an offer in, the other agent is aware that this is a solid offer. That's so important.
Solid offers are so important right now. And I like what you said about appraisals, because I've represented buyers who are wringing their hands, will it appraise, especially if they paid over list in today's market.
Yes.
And it's great to have people understand what's going on in today's market. Well, that's fantastic. I'm glad to learn about the subtle and important differences in your company.
Absolutely.
So, I mean, anywhere from with the traditional full down payments, 20%, but you can save cash, right, to get into your house and do like a 3%er or something like that.
Oh yeah, absolutely. And honestly, Dave, most people do not put 20% down. A lot of people put 5 to 10% down, and the reason being is the old adage is anybody who bought a home 20 years ago, they always advise their children, put 20% down, you want to avoid that mortgage insurance. However, about 3 years ago, they changed the formula on the conventional loans for the mortgage insurance. It used to be a set percentage, regardless of your credit score. However, now it's based on your credit score. So if you have two borrowers with excellent credit, I just did this yesterday, they put 10% down on a $400,000 house. Their mortgage insurance is $39 a month, and that's for about 5.5 years.
Wow, so
that's just making the minimum payment.
Yeah, that's a no-brainer, and it saves you all that cash that you may need to fix up the house. And to support also what you're saying, again, this is just in my own personal experience. I don't really have a lot of data. The one piece of data I have is the National Association of Realtors said that a new high of 22% of houses reduced their prices in the last month or so.
Yes, that is correct. I saw that as well.
And that it used to be nobody reduced their price. And the other thing, again, from my personal experience, is there are what I call the gem houses that are perfectly cared for, move-in ready, and so forth. And there's still a lot of buyers out there, and there may be some competition to take it above list price. But I think a lot of houses, like you say, are going at list or slightly below. And if the average is 0.7, there's many that go for 3% or below, or there's that same number going to go for 3% above.
And what I'm seeing just in the last month or two is that they're not competing against 12 other borrowers.
Right.
At this point, so you may go in at 2 or 3. A lot of my current clients right now are putting in offers at listing or slightly above listing.
Yeah.
Which was not the case just 6 months ago. People were looking at a $475,000 house, putting an offer in for $515,000 and losing that offer.
Yeah, believe me, the stories all of us realtors tell each other about, you want to be the one that had the house that got the 10 offers over a list or whatever, but it does happen. And in fact, it happened in my neighborhood recently. It was pretty outstanding. And what's interesting is the house sold over list to the very first buyer. Mm-hmm. So they had invisible competition as far as I can tell. Well, how did you get into this business, and what do you like about it?
Well, it's easy for me to tell you when I got in this business because it all started right around the time my daughter was born. My daughter just turned 16. I was working as an executive recruiter for accountants and financial planners. I have a financial background. I have an accounting business degree. And when my daughter was born, I was working 8 o'clock in the morning till 5 o'clock in the afternoon. And I had some friends that were in the mortgage business, and I wanted to maybe get away from that corporate environment and give myself, I say freedom, but it's when you're working 60 hours a week, it's not necessarily freedom. But as you know, we work a lot in the evenings and on the weekends. And this way I could take my daughter to appointments and spend time with my daughter in the day when my wife went back to work. My wife at the time worked with, I got stuck. I apologize. My wife worked with children 6 months to 2 years, and she did a lot of in-home visits. So this gave me the opportunity to stay home with my daughter and do some work on the phone. I did go into the office, but as I said, a lot of work was over the phone, and it gave me the opportunity to have some time with my daughter and some free time.
I can see that, and especially I think the pandemic is, whatever you'd word, accelerated the process of people working remotely.
The ability to work from home, and they're buying houses in Butler and Beaver County. The only problem some of them have experienced, and I advise my clients to do this before they buy there, is make sure you have good Wi-Fi up there. Because I had a fellow who bought a house up in Beaver and his Wi-Fi was horrible.
Oh, right. Well, it's funny, I think towards the end of 2020, one of the fastest growing real estate markets in the country was Boise, Idaho. And it was people from the West Coast, getting out to the country. Mm-hmm. And unfortunately, a lot of those really hot markets have receded a little bit. But, we're lucky here in Pittsburgh. It's pretty stable. I don't think it'll ever go completely backwards, but it's slow, continuous growth.
I always say that's one of the best parts about here. 2008, the collapse. Nothing really happened. I was in the mortgage industry at that time. Nothing really happened here in that regards because the prices were not overinflated. You had a lot of these interest-only loans that were being sold down in Florida and California. And the thing about the interest-only loan was the pitch would be, as long as your house doesn't depreciate, you'll be fine for the next 2 years. What happened? Everybody's making these interest-only payments, and their house is depreciated drastically. And that did not happen here in Pittsburgh because they were not overinflated at that time.
Wow, that's interesting. So I imagine you've had a lot of interesting experience with clients. Does anything pop into your mind when you think about interesting experiences?
I think about every time I'm watching a football game. I had a borrower several years ago who was a member of the Pittsburgh Steelers. And if you recall, several years ago, remember they had a work stoppage?
Oh, right.
So he wanted to buy a house during this work stoppage. And in the mortgage industry, whether you're making $2 million a year or $2,000 a year, you have to be employed at the time that you purchased the house. And they did not have that happening for them at that time because they were on strike. And then not only that, he was in the last year of his contract. So he did not have what we'd call continuous employment because we didn't know what was going to happen for him after the next year. Now, he was trying to do a conventional mortgage this whole time. There are other avenues that he could explore, which I believe that he did. But during the work stoppage, he pulled up to our office with a $300,000 Lamborghini and tried to offer that as collateral.
Oh, wow. That's so interesting. Well, as the story goes, don't sign the dotted line on your mortgage and then go out and buy a new car and change your whole financial situation, especially a Lamborghini. Oh my gosh. Well, what do you like most about, I mean, you work all over Pittsburgh. I focus on the North Hills, Cranberry, Franklin Park, the North Hills area. What do you like most about Pittsburgh and just this as a place to do business?
Well, first of all, affordability
Right.
of the houses. As we just mentioned, during the 2008 crash, the house is maintained here, and there's still great value here. I just read over the weekend the median price of a house in the United States is $465,000.
Oh my goodness.
I mean, we've lived here. You know what you can get for $465,000. You can get a pretty nice house
Right.
for $465,000. So the affordability of the houses here is wonderful. And then, in regards to the people, I don't want to sound cliche, but it's salt of the earth people here in Pittsburgh. It's hardworking people, and you have to gain their trust. And if you gain the people's trust, you have a client for life. I've set my whole model up on having people being able to trust me and tell their friends and their families about me, because it's all about, for me, it's growth. It's building referrals.
Yeah, trust and relationships. And if you're new to Pittsburgh, take note of that, and I think you'll find out as you live here. And I'm a Pittsburgh that lived away for a few years and circled back, and I don't think I'd go anywhere else.
I did the same thing. I moved down to Ohio for 10 years, and it's the grass is not always greener.
Yeah, that's interesting. What do you do outside of work? Do you have any favorite pastimes?
Well, right now, as I mentioned, I have a 16-year-old daughter, so I kind of live vicariously through her. She's involved in so many things. I joke with my friends and I say that I'm an unpaid Uber driver, meaning that I go pick up my daughter and then she tells me where I'm taking her next.
Yeah.
But I don't get compensated for that.
Yeah.
What I like to do, a hobby of mine, basically my whole life, is I collect vintage toys, vintage NFL college football memorabilia, and LPs. Now, I have LPs from when I was a child, but I've really taken that on as a passion lately, going around getting LPs. And then again, like with the vintage toys, I mean, these were toys that I grew up with, and I'm circling around. I'm reliving my childhood now, and buying toys, collecting toys from the 70s. It's funny, in my downstairs I have Charlie's Angels dolls next to NFL dolls. Really the way it should be, right?
Right. Well, Sean, I want to thank you so much for taking the time today, sharing information about mortgages. If you want to learn more, you need to get in touch with Sean and find out how you can walk through the front door of your next house today or tomorrow, no matter what the circumstances are. So tune in again next time for another edition of Exactly at Home, north of Pittsburgh. We'll see you.